following is an update and technical analysis on General Motors, a company of the consumer cyclical sector in auto manufacturers based upon the daily realm, where I'd mentioned on the 16th of September 2023, we're trading spot price $34 when I had created the General Motors stock analysis video as historic UAW auto worker strikes ended up being unleashed like never before, coupled with bad technical posture in this hidden RSI concealed divergence. Beautiful, big divergent high there, concealed with this primary reactionary downtrend line based upon the June reactionary highs, just a multitude of reactionary strength upon that primary resistance level. And I had mentioned how I favored a potential snapback and or counter trend rally right back to the primary reactionary downtrend line, offering a great risk reward setup, if not an add-on to your existing short trade position. And that it was coupled with potential for a foundation of a bear flag continuation pattern. And this was the flag to the primary reactionary down with a perfectly measured target down to the 28.46 price support, which would ultimately undercut the primary reactionary uptrend line off July to the, call it, multi-year price support here. Just a continuous stream of reactionary lows to strengthen the power of this price support level. And here's the update. We ended up having that steep counter trend and or snapback rally right into the 50 exponential moving average and the primary reactionary downtrend line. Call it a dual price resistance level, and the entire trade thus far has been good for a 7% crash to the downside. And here we are at an ever more critical juncture in a much more precarious state than the primary downtrend line. This multi-year price support level, take away all the lines here, and that's really what gives me a neckline off this head, monstrous potential consolidation of shoulders, where you have your head and then your additional two right shoulders. And I believe that the demands fundamentally by the UAW, where I'd mentioned in my previous video, is putting forward the 40% increase in wage coupled with a 32-hour work week. You take away 20% deduction in the hours worked, and you take that 40% increase in pay, you're technically getting a 75% increase in pay when you account for the reduced hours of work. And again, the demands the UAW is putting forward are undeniably extreme. If even a fraction of these demands are met, in my opinion, it could lead to financial ruin for some of these automakers or result in astronomical auto prices, especially if foreign automakers follow suit in raising their prices. That's what I believe, with a huge volume profile down below, huge volume profile shelf down below. And if we take that level out, short sellers will want to see a nice, clean daily sell signal red candle close below that key inflection point. Again, offering an additional add-on to your existing position for a much more levered trade to the downside and hitting the 3080 price support, and then ultimately connecting the bear flag pull perfectly measured target down to the 28.46 price support for an 11.8% crash. We additionally have damage within the structures of the technical key momentum indicator dimensions, with looming potential bearish sell signal crossovers in the price percent oscillator and the moving average convergence, with just an oscillator histogram just waning down, with ever smaller green candle closes up above the zero line threshold, just waiting for an additional red sell signal crash below that key inflection point. And I believe we're at that key inflection point as of now, correlated with some of these technical momentum indicators, which would only spell further damage and then a much stronger wave of selling, in my opinion. If something were to avert, we get some good news. Out of nowhere, the workers decide to take a smaller pay increase. Bull traders, long traders would potentially set some stops below and gun right back to the primary reactionary downtrend line, if not the 50 exponential moving average, to avert this potential bear flag continuation pattern from panning out and or structuring a total chaotic sell-off in an all-out extreme rush for the exits.